Welcome, everyone. My name is Nina Kodik, and I am the new president of Visionary Women. It is my sincere pleasure to serve this amazing community, and I truly look forward to a stellar year together. For those new to Visionary Women, a very special welcome. Thank you for joining us today. Visionary Women is a unique nonprofit community of women supporting other women. We are Los Angeles based and membership driven. We are a giving circle. Our salons have featured some of the most amazing, admired, progressive female thought leaders and change agents. And today, we have the incredible Suze Orman. Through our collective giving as a giving circle, Visionary Women is able to fund high impact initiatives that make a difference to the lives of women and girls everywhere. Please see our website for the many organizations we've been able to give to, including our emergency COVID fund, for which we are really proud. And now that we are sharing our program content online, you can join us as a member from anywhere. You don't have to be from Los Angeles. So we are so grateful for any support that you give us in making a difference in the lives of women and girls. Please go to our website and join us. You can donate, you can join as a member. Any support would be great. So now it's my great pleasure to welcome the incredible Suze Orman, America's personal finance expert and host of the Women and Money podcast. Suze is a personal superhero and a longtime advocate for women, and she will be sharing with us today how to ride out the storm of COVID-19. We're also delighted to welcome May Cheng, the Senior Vice President of Barron's Group at the Dow Jones, where she oversees many leading publications, including Barron's, MarketWatch, and Financial News. Please ask any questions that you have in the chat box, and we will have a Q&A after Suze has a chance to talk with us. Thank you so much to both of you for being with us and to all of you who are viewing this today. Take it away, May.
Thank you, Nina. I can't tell you how delighted and honored I am to be here and to be on the same virtual stage with the one and only Suze Orman. As Nina has described Suze, she is a top financial advisor, but for many of us over the years, she's really been that powerhouse of reason when it comes to our finances, particularly in economically unsettling times as we're currently experiencing right now. And on top of that, she's been that wonderful cheerleader and inspirational force who helps us believe in ourselves and what we can do no matter how dire our financial situation may be. And as that wasn't enough, as Suze is this two-time Emmy Award winner, a New York Times bestselling author, a regular on many TV news programs, and she's the host of the popular Women and Money podcast, among many other achievements. Thank you, Suze, for being here today to inform and inspire us.
Thanks, May. Let's rock the house.
Let's do that. So just to get started, I know we have a lot of ground to cover on financial, with your financial advice, but I'd love to have the audience get to know you and your journey a little bit, if that's okay. I believe you're originally from Chicago, is that right?
Yeah, actually, I'm from the South Side of Chicago. And when one says the South Side, that's usually the place when you're reading in the newspapers of all the murders and everything that goes on. That's where I am from, and it's because I grew up there. The truth of the matter is I was one of the only little white girls in a sea of black faces. And because my parents didn't have any money, so they really couldn't move. So when everybody else fled, the South Side, we stayed. And it was the greatest thing that ever happened to me, May, because it was there that I learned who I was. It was there that I learned the reality of life and not having money. And to this day, I'll always thank my parents for poverty, because poverty, not having chances to do things, not having a great education, made me who I am to this day, to tell you the truth.
Yeah, I can see that. Well, what was your journey like to becoming the financial guru that you are today?
Well, it's an interesting one. I was a waitress at the Buttercup Bakery in Berkeley, California, from the age of 23 to 30,
Okay.
making $400 a month. And at the age of 30, I thought, I know I have an idea. I can open up my own restaurant. And to make a very long story short, the people I had been waiting on for 7 years gave me $50,000 to open up my own restaurant. I did not know what to do, obviously, with $50,000. They told me to go down to the local Merrill Lynch office. I didn't know what a Merrill Lynch was, by the way, which is a brokerage firm, if you don't know. Put the money there until they could help me open a restaurant. I went into Merrill Lynch. I was greeted by Randy, the broker of the day. And I told him what the money was for. And he said to me, Susie, how would you like to make a quick $100 a week? And I go, Randy, that's more than I really make as a waitress. He said, sign here. I signed all these blank papers. And when I left, he filled them out to make me look like I was a sophisticated investor. And again, to make a long story short, he took all the money, invested it in the options market, which is the most speculative investments you can make when investing money. And in 3 months, all the money was lost. And now I didn't know what to do because they lent me that money. They didn't give me that money. I was supposed to pay them back if I could. So I thought, I know I can be a broker. They just make you broker. And I went in, with my red and white striped Sassoon pants tucked into my white cowboy boots. I had a blue silk shirt on. And I went in to apply to be a broker at Merrill Lynch, thinking I have to make more money than $400 a month. And they hired me simply to fill their women's quota. There were no women working for Merrill Lynch in the Oakland office at that time. And I was told that women belong barefoot and pregnant, and they would hire me, but they would fire me in 6 months. I said to them, great, how much will you pay me to make me pregnant? They said $1,500 a month. And I said, I'll take it, because I knew that was $9,000, which would take me 2 years at the Buttercup. Well, again, while I was working for them, I realized what my broker did was illegal. I ended up suing them while I worked for them. They couldn't fire me because I sued them. And before you knew it, right, I was one of their top producing brokers. And then as time went on, I simply wanted, to help people because I had lost my money. And I didn't want other people to lose their money. And, I ended up, in 1987, opening up my own firm. And then I wanted to write a book simply to impress my clients, not to become a New York Times bestseller or anything. And I wrote this book called You've Earned It, Don't Lose It in 1995. And somehow that book went on to sell 800,000 copies. And most people in hardback, authors, if they sell 25,000 in hardback, they've sold a lot. And then I was teaching a course called The 9 Steps to Financial Freedom and wrote a book on that. And that went on to sell like 1 million copies in a month. Before you knew it, I started to become Suze Orman. It was really kind of that simple, believe it or not.
That's a great story. I'm so glad you rocked the world, because I'm sure you also paved the way for a lot of other women who are following your footsteps, and they're just not there just because they're a woman, but because they actually contribute quite a bit to the business. So
well, the main thing, May, that I hope people would take away from my story, every woman that is watching right now, there isn't an excuse big enough to keep you from being who you are meant to be. I never got a grade above a C in college, totally dyslexic. I have written more books than I have read in my entire life. I didn't come from money. I wasn't educated in money. My degree was in social work. And look at me today. So if you're out there and you don't know what you want to be, and you're just like, well, I'm not educated. I'm not good at this. Doesn't fly. Doesn't fly here. That's not a vision that you want to hold for yourself. That's not a woman who you want to be. I want you to look at me, and I don't want you to be impressed by me. I want you to be inspired by me. Because if you work hard and you go for it and you give it everything you have, anything that you want to do can become a reality.
Yeah. Before the show started, I was just telling Susie how she inspired my best friend in high school and I to take ownership of our personal finances. So you have been an inspiration, I'm sure, for countless people, in particular women. So wanted to switch gears a little bit. Oh, and I do want to tell our audience, I know you all are chatting in the chat function saying hi. So thank you for joining us. If you have questions along the way, please do type your questions in the Q&A file, and we'll either get to them as we speak with Susie, or we'll get to them at the end, or we'll try to get to as many of them as we can at the end of this conversation. So Susie, we're coming on nearly a year of the COVID-19 pandemic, and some of us have lost our jobs, some of us have seen our incomes reduced, and some of us have fallen sick and can't work. In fact, I think in a prior conversation, I heard you call this the Great Reset. So what are the most important things to consider when it comes to making sure that our financial house is in order right now?
You know, it depends who you are that out there. You know, the truth of the matter, May, is if you think about it, for many people, the pandemic made them really rich, believe it or not. They didn't have to go to work anymore. They didn't have to spend money on transportation or on clothes or on food. They got to make the same amount of money staying at home. They got to possibly take advantage, but if they had money of when the stock market went down, to buy even more shares that made them more money. And so they're doing really well. Those are the people that I call the haves. Then I'm so sorry to say there are so many people out there that are the have-nots. They don't have their job back. They don't have their emergency funds that they need. They don't have their retirement accounts anymore because they had to withdraw all the money from their retirement accounts just to support themselves. They don't have the ability to even think about right now, what are they going to do? Because they're just so overwhelmed staying at home, taking care of their kids who can't go to school and all of this stuff. So this is the time when you have to dig deeper than you've ever dug before in your life. And especially if you're a woman, you have to know that if you have too much on your plate, you just have to get a bigger plate. That as a woman, there isn't anything, and I believe this from the bottom of my heart, that as a woman, there isn't anything that you cannot do. So you just have to take it day by day. Obviously, if you still have a job, if everything's still going good for you and you have money coming in, you better make sure that you sock away all the money that you possibly can. You better make sure that you have at least a 12-month emergency fund. Forget the 8-month. But a 12-month emergency fund, you better be contributing to your retirement accounts. They better be Roth retirement accounts if you can. You better be getting yourself out of credit card debt. You have to be doing everything today to protect your tomorrows, because you've got to learn. You've got to reset how you think about things, that anything can happen. It happened this last year. It's still happening. It could get worse again. So you have to prepare. For those of you who don't have a paycheck coming in, you don't know what to do, you just have to make the most out of any possible situation. So if you get the stimulus check, if you get the extra money with unemployment, can you just save it? I do not want to see you take this money and pay down credit card debt with it. I do not want to see you take this money and pay off something that you owe or whatever it may be. Again, the president just extended student loan repayments with no interest until September 31st of this year. So you have a break now. If you're a student out there and you owe student loans and they're federal loans, don't pay them right now. Don't do it. Take the money that you normally would have paid for that or whatever and save it if you have the ability to do so. But May, it's very difficult. What does one do when they have no money coming in? They have to take care of their, family and everything. That's when you have to dig deeper than ever before. And sometimes you have to ask others for help. Do you have friends that you could ask for help? Do you have parents that you can ask for help? So the have-nots, you're in one situation. The haves, if you happen to be in a situation where you're going to get this stimulus check, you're going to get certain things and you don't really need it, can you help somebody who's a have not? Can you just help them? Because it's going to be very difficult for the government to truthfully help us, in my opinion, unless, everybody just override. If there isn't any bipartisan thing, okay, maybe they can help us. But I'm not exactly sure that's the kind of government that we want to have.
Yeah. That's a great point. So, am I understanding you right in terms of you saying that saving is the most important thing, and if it's okay if you can't pay down your debt, you just
Yeah,
have.
you betcha. Because if you use that money to pay down your credit cards, and then let's just say the economy doesn't do well, even though it's projected to do well, let's say it doesn't. And a lot of people start to foreclose on their homes. A lot of people cannot pay their credit cards because they don't have the money. And stimulus checks aren't coming and the jobs haven't come back. Then what happens? Don't be surprised if the credit cards companies don't close down your credit cards and close down your credit limits. So now you've paid off a credit card. Now they close it down. Now you can't use it. So now what are you going to do? So, and that's exactly what happened, if you remember, May in 2008. The credit card companies rescinded credit limits and closed your credit cards. Don't think they won't do it again. So from there, I learned I don't care if your FICO score goes down. Actually, to tell you the truth, people, I care that you have the ability to feed yourself and your children. So if you're getting, and I think you probably will get that additional $1,400. So if you're getting $2,000 for you, $2,000 for your spouse, a few $100s for your kids, $4,000, $5,000, $6,000, can you just keep it in a savings account for now? For the things that you have to spend money on, and send in the minimum payments due if you have to your credit cards.
Do you even take that a step forward and try to squeeze even more liquidity? Like, do you take a home equity loan or lines of credit? Would you even recommend going even that far?
You betcha I would, if you happen to be the haves, because if you're a have not right now, they are not going to let you take out any equity from your home because you won't qualify for it. But if you happen to have a job right now, you have income, you have equity in your house, every single one of you should have a home equity line of credit that you don't use, just in case, which would be far better for you to get money from than to be taking money from a 401k plan. It makes absolutely no sense to withdraw money from a 401k. Do you know, everybody, that your retirement accounts are not affected in bankruptcy? They can't take your retirement accounts, a 401k for any amount of money, and an IRA up to $1 million. So if you had, let's just say, $10,000 in a retirement account and you're behind on your bills and you want to take the $10,000 out of your 401k to pay off your bills, right? And now the money's gone and now you don't have any money again. And now you have to claim bankruptcy. You might as well just claim bankruptcy to begin with, rather than take money from a retirement account. So a home equity line of credit, credit limits on credit cards in case they don't close them down, fabulous way for you to go. And a Roth IRA, which is why, and I said it earlier, the reason I want everybody to have a Roth IRA, if they qualify, is simply because you can take out your original contributions anytime you want without taxes or penalties, regardless of age or how long the money's been in there. So if you really need money, okay, a Roth IRA is a place that you can get it. But again, Roth IRAs are protected against bankruptcy.
Got it. So switching gears a little bit and talking about the haves a little bit more. At the same time that we've been going through a pandemic, the equities market has done fairly well. We've hit record highs, Dow Jones Industrial and the S&P 500. We've also hit some bumps, right? Like last week with all that went on with the GameStop the situation. First of all, what are your thoughts on how the market will perform this coming year? And are we actually in a bubble, as some believe we might be?
I'm not sure I'm calling it a bubble. And I'm not even sure, truthfully, how what happened last week with GameStop and how social media right now and the groups that are forming, truthfully, are going to affect the future of investing. And to tell you, I'm afraid of it. I don't like what I see happen. I don't like what I saw happening with GameStop at all. I don't like what I saw happening with AMC. I don't like what I saw happening with the silver markets. There are bigger ramifications, everybody, besides just the fact that you think you're taking down hedge funds. It's not exactly that easy. And so that scares me, I have to tell you, because I think a lot of people are going to be so hurt, it's not even funny. But if we were in regular times, which hopefully we'll go back to, May, I really think we're going to have a fabulous market for February and probably through March. And then I have to tell you, I'm a little hesitant. I think it is very possible or probable, and I hope I'm wrong, that these markets could turn and start to go down for a considerably long period of time. Mm-hmm.
That's really scary,
Yeah.
but do you think that the stocks that are doing well and the market doing well so far is have they already priced in like the efforts to vaccinate people, and does that play a role in how will that continue to play a role in the future?
I think they have played that in. I think there's a lot of exuberance in this market. I think that, that a lot of the stocks that are just skyrocketing. I mean,
Yeah.
did you see Google today? Did you see some of these stocks that Tesla, like, is Tesla really valued like this? So that scares me.
Yeah.
It just does. A lot of this reminds me of the internet bubble that happened in the late 1990s and everything. So yeah, I'm very cautious right now with this market. With that said, if you're somebody who needs money within 1 to maybe 3 years, that's not money that ever belonged in the stock market. The market's doing really great right now. Who cares if it continues to go up? Who cares if you leave money on the table? And if you take into consideration the taxation, because a lot of you probably have all of your money in your IRAs, in your 401ks, in your TSPs, there are no tax ramifications for that. And I would let the markets probably run a little bit here, but if you came out, and I'm not one that says one should time the market on any level, because I think you will be hurt if you do so. But if you need this money, who cares if it continues to go up, especially if you have enough right now? Enough to what? Enough to retire, enough to make sure that everything is okay. Because if you need the money, then you need it for something. If you're out there, however, and you don't need this money for what? 20, 30, or 40 years, okay, and you're diversified and you're invested in really good quality stocks. A lot of them are, again, exchange traded funds with a lot of diversification. I would probably let it ride, but I would be dollar cost averaging into this market. I would not be lump sum investing at this point in time.
Yeah. Are there sectors that you would look for investing in or feel better about investing in? Even if
I really love Kathy Wood of the ARC Innovation Fund. I love her. And her ETFs, ARKK is one of them. You should look her up, everybody. Here's a woman who I think is so brilliant. And I think she has the ability to know when to come in and when to go out. And I think she could manage that for you very well. So I love innovation. And I do think the future are things like that. However, I still love PayPal. I love, Square. And to tell you the truth, I'm a really big advocate of Bitcoin. And ever since PayPal started to sell Bitcoin, you've seen it rise considerably. Now, do I think Bitcoin is going to go straight up from here? Do I think any of you should be putting a whole lot of money in Bitcoin? I do not. And I would only be putting money in Bitcoin that if you lost it all, you would say, well, that was fun. I don't care. But I do think one day, I think we could see Bitcoin skyrocket in this month and next month, and then it could very well retreat all the way back down. But I think one day, a few years from now, I think Bitcoin is a very interesting play here.
We actually had a lot of questions, or have a lot of questions from our audience about Bitcoin. I guess some are wondering if it's too speculative to place a bet on, but I think what you describe, it's a good way of thinking about Bitcoin. What about investments like the real estate market? We've seen a real demand for homes around the world. Is this a good time to buy property, buy your second home, buy your first home?
Yeah, I have to tell you, I don't think so. And let me tell you why. And I know that I'm not in the majority of the viewpoint here, but it concerns me. What concerns me is this, that there's been a moratorium on rents. There's been a moratorium on mortgage payments with certain lenders. So landlords haven't had to pay mortgage payments. Renters haven't had to pay rent. There is going to come a day when that is not true. The mortgage companies are going to say, pay me or you're out. The landlords are going to say, pay me and pay me for all the back rent for the past year or two, depending on how long the moratorium goes on for. And if you can't come up with that money, you're out. And I think somehow there's going to be an effect here. A week ago, I think it was, there was a mall in Las Vegas, Nevada, that a few months ago had been valued at about $24 million. It sold in auction last week for $1.5 million. $1.5 million. When I start to see commercial real estate start to go down like that and become devalued, and a lot of these companies that used to have people living in a specific area because they would come in to work there, and now they don't have to come in to work there anymore because now they can live anywhere they want to live and Zoom in and work from home. And all these things, we've disrupted the normal flow of where people live, how they live, and what they should do. I think the increase in real estate has been a lot from people who wanted to flee COVID environments that they didn't want to live in, and they wanted to go to a place that they had a yard or they had this, and they took advantage of certain things. I do not think it's going to last. I think the perfect storm is coming. I just do.
Interesting. I know we've been talking about the haves, and I know one of the things that we spoke about previously is that one of the sad parts of this pandemic, there are many obviously, but there's this growing wealth gap, and between the haves and the have-nots. And I was very encouraged at the start of the program about you encouraging people, the haves, to donate. Are there best practices for donating? Like, do you donate to an organization directly or to community groups, or what is your philosophy on that?
I would tell you at this point in time, I know that every single one of us knows one person, one family, two families that are behind in their rent. They don't have a job. Their job is not going to come back. Their kids are still at home. They're taking, and it's beyond the beyond. They're behind in their car payment, everything. We all know a family like that. It would be so great if you could give it there. Because I still have a thing. I know I'm very cynical this way. I like giving to food banks and I like doing all of that. But when you can give and see the direct effect of what you've given to somebody, but you have to give it with grace. You can't give it and make somebody feel like, look what I did for you. You have to look at it like, look what I was able to do for myself. Because May, there's a thing about giving. And giving goes like this. When you give, you feel generous. When you feel generous, you feel powerful. And when you feel powerful, the number one law of money comes into effect, which is Power attracts money and powerlessness repels it. You know, money is controlled by people. They're the ones that give you a paycheck, a pay raise. They're the ones that hire you. And when you feel powerful in life, you attract people. And since people control money, you attract money. When you're powerless, you're in debt, you don't know what to do, you don't know where to go, you repel people, and therefore you repel money. So what's going to get you to have a job, what's going to get you to get somebody to take notice of you is how you feel about who you are. Who you are, and lack of money doesn't make you lack of worth. Self-worth and net worth really are one. And so you have to understand that your money doesn't define you and you don't define your money, that you are so valuable just like you are. You know, a while ago, I was talking to some of the women from, you know, this organization, and I was telling them that in China, that there is a saying, you know, that women hold up half the sky. I believe from the bottom of my heart that in America, women, we hold up the entire sky. So whether you're a have not, doesn't matter because you are a woman. And as a woman, you have energy and you have courage and you have the ability to give birth in most cases. You have the ability in most cases to feed that which you have given birth to. You can give, you can give, you can give, but now is the time that you have to learn to give to yourself as much as you give of yourself. And that's a difficult thing to do right now when everybody is wanting something from you. But I believe with all my heart that all of us have to become warriors and not turn our back on this battlefield. You know, we really have to face everything right now and just know that day by day, we're going to get through this and everything eventually here. We're closer to the end of this than we were a year ago, if you think about it. So we're getting there, May, day by day.
Yeah, the silver lining. Talking about like thinking of yourself, you know, it's probably a pretty scary time for those who are close to retirement or are retired, just because, you know, the market is fluctuating and there's so many uncertainties. How should they be thinking about their portfolio and their investments?
Yeah. If you are about to retire, and you know, not that I'm plugging it, but I am because it's fabulous. My last 10th New York Times bestseller is called The Ultimate Retirement Guide for 50 Plus. And I wrote the book while knowing everything that was going to happen this year and last year. And so it was everything is what you need to know. And in there, I really talk about that if you have money in the market, okay, but I want you to have at least a 3-year cash cushion. Because once you retire, if these markets start to go down, let's say what I think is going to happen, and now the markets go down, 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 down. It normally takes 3.1 years from the high of a market to the bottom of it for it to come back again, 3 to 5 years. So if you had a 3 to 5 year cash cushion that you could live on during the time of the decline of the market and then the return, then you would be okay. Because the real problem here is, well, what do you do with the money today? Interest rates are so low. It's not like it was 20 years ago when you could get 10%, 8%, whatever it may be. So there are still a lot of fabulous quality stocks out there that pay you a fabulous dividend. They're cash-rich companies that, so what? So you buy them, get the dividend, so you're making income. Who cares if they go from 40 to 20? They'll come back again. And in the meantime, if you need more money, you have your cash cushion. So that's kind of what I am telling retirees at this point in time.
I'm going to ask you one quick question just to follow up to that, and then I want to go to some audience questions because we have so many questions coming in. But for those who are retired, how do you feel about that 4% rule where like some believe you can safely withdraw 4% of your portfolio? Do you?
I don't like it. And the reason that I don't like it is because I still believe that that 4% rule was also created when interest rates were a whole lot higher than they are now. When the market, even though the market's always been volatile, if you think about it, but before real estate prices, look at the price of real estate today. Look at the price of property taxes on the real estate that you have. Look at the cost of your insurance today. And that 4% rule has been around so long that you have to wonder, does that even apply anymore? And I have to tell you, I don't really think it does. So I think you really have to start downsizing now. You have to spend less and save more. You have to not get caught up in, being so attached to your home that to stay in the home as a retiree, you do a reverse mortgage. So for those of you who are young out there and your parents are in their homes, and maybe they're keeping these large homes so that you can come home and visit them once a year. If you can even do that now with the pandemic, everybody should live absolutely below their means, but within their needs. They should not be spending what they can afford. They should be spending less than what they can afford to spend. And we should be saving money because the truth of the matter is you can never be too rich. I don't care. Years ago, when I was a little girl, I'll just tell you a very quick story. My mommy was a secretary and she worked for a lawyer, and interest rates were really high at the time. And I remember going to Mr. Lieberman and I said, Mr. Lieberman, can you just give my family $1 million for 1 year? We'll get 10%, we'll put it in a safe place. We'll make $100,000. We'll give it back to you, and then we'll be set forever. And he just looked at me and he said, well, don't you think I want that 100,000? And I went, well, do you need it? But it was, you were able to do things like that. If you have $1 million today, what is that going to generate for you in safe money? Really? And so you have to, it's a whole different thing today than it was.
Jumping to a different generation, Sally wants to know, what resources do you recommend for Gen Z's next gen to learn about personal finance basics and to learn it now to build security and wealth later on?
Can you tell me what Gen Z age bracket is? I get them all mixed up. Sorry.
So it's like it's basically the younger folks, people in their 20s and 30s, and how do you younger generation, how do you teach them about the basics of personal finance?
Yeah, here's the thing. You're so lucky. You're so lucky because time is the most important ingredient in any financial freedom recipe. To be 20 years of age and start dollar cost averaging right now into a good index fund like the Vanguard Total Stock Market Index Fund, even into one of Kathy Wood's, innovation funds, and have a nice mix of ETFs there, and start doing it every month in and month out. Do you know that if you invested $100 a month, and let's say you just did that in your Roth IRA, and you did that every month and you were 25 years of age, and you did that every month for 40 years till you were 65 years of age. And it's not impossible that you could average a 12% annual average rate of return. In the past 10 years, we averaged almost 14%. Do you know you would have $1 million? $1 million. But you wait 10 years. You think, what difference can $100 a month be? That's $1,200 a year. That's $12,000. I can start at 35. Do you know if you start at 35 versus 25, at the age of 65, you would have only $300,000? Those 10 years cost you $700,000, and that's at $100 a month. So your main priority right now, if you're 20, 25, 35 years of age, really is to every single month, if you can, max out your Roth IRAs, max out your 401ks. If you get, if your company has a Roth 401k or whatever it may be, make saving and investing your number one priority. Where do you learn how to do that? I have to tell you, you can read, watch CNBC, watch the programs, listen to my Women in Money podcast. There are many books. I have 10 books out there. Any one of them can absolutely teach you how to do these things. But just start reading, read the Wall Street Journal, read those things. Fabulous, journals out there. When I first started, I read Barron's. I couldn't wait for Friday to come out for me, even when I was a waitress. And after they started to invest my money in the options market, you should have seen my bedroom. This was before really computers. Apple was just starting then. And I would take Barron's and the Wall Street Journal, and I would cut it up and I would paste it all over. And I started to figure out how things worked. And I would listen to Louis Rukeyser on PBS back then, Wall Street Week. And I started to learn. And in the 3 months it took Randy to lose my money, I knew more about the options market than he did. And so you just do it. You decide, I want to learn, and you learn.
You're a living inspiration, definitely. I believe you're not a huge fan of whole life insurance. I could be wrong, but Hiromi wants to know about any suggestions you have for life insurance.
Yes. Life insurance was never meant to be a permanent need. It was never meant to be there for your whole life. What insurance company is going to give you a $300,000 death benefit if they didn't make $600,000 off of your money and everything? Really? They're not in here to make sure that you're okay. They're in there to make sure that they are okay. Insurance was only supposed to be there for your younger years. So if something happened to you, you died before you were expected to die in your 80s or 90s, and you had people who were financially dependent on you, they would be okay. The only type of life insurance I would get if I were you would be term insurance. Term meaning it's good only for a specific period of time. I would look into a 20 or 30-year level term policy, and you could easily get $500,000 or $1 million 20-year level term policy when you're 25, 35, 45 for maybe $25 or $50 a month. Now, remember, it's going to expire worthless. But during that time, you should be investing money. If you buy a whole life policy, you buy a universal life policy, you buy a variable life insurance policy. Those are the 3 types of insurance policies that I hate more than life itself. I think they are ripoffs. I think they are the highest, commissioned item that a financial person can sell you. If you have a universal whole life or variable life insurance policy, do not cancel it. Do not cancel it until you have a term insurance policy in place. Once your term insurance policy is in place, then you can cancel it, because you need to know, are you healthy? Are you not? What if you're sick and you don't know? Then you're going to be happy that you have that policy that you currently do. I like selectquote.com to be able to go and get a quote from to see how you're doing. I am not paid to say that. You can go to any quoting service, and whatever you get quoted, the cheapest, that's the one you should take.
Great. So we have a question from Dawn, who's asking about your Alliant Credit Union and whether it allows for a special deal on trusts. So can you talk a little bit about the Alliant Credit Union?
Yeah, so all of you may know I have the Women in Money podcast, and the sponsor for the podcast is Alliant Credit Union. So, all right, they're sponsoring my podcast, and I go to them. This is after they already said they wanted to sponsor the podcast. Fine. And I said, I want you to do something great. I want you to help all the people out there who lost their emergency fund last year because they used it up. I want you to do something for these people. And I go, what is that, Susie? And I said, can we strike a deal that if they deposit at least $100 a month, every month for 12 consecutive months into a savings account, that at the end of the 12th month, you'll give them $100. And I said, Susie, do you know that you need $100,000 in a savings account today at 0.55% interest, which is what we pay to everybody, Susie, to get $100 in interest. Why would we do that? And I said, because you're going to help people. And you can do it just for like a month or two. You don't have to do it forever, but can you help them? They said, yes. We decided to call it the Ultimate Opportunity Savings Account. If all you put in is $100 a month for 12 consecutive months, and then you get the $100, that's a 16.7% return on your money, because you're also going to be getting the 0.55% interest. There are no fees, there are no charges. As long as you get e-statements, you can take your money out whenever you want. This isn't any come on or anything like that. All you have to do is go to myalliant.com. You'll see a little video of me and sign up. I think the question was, can you own this account in a trust? You cannot. You can make the beneficiary of the account the trust. But because so many people are doing this, thousands of people are doing this now, it's just easier if in fact it's an individual name and the beneficiary is the trust. So if I were you, I would so take advantage of it. It's not even funny.
Great. We have, I'm going to take one or two more questions. I want to be respectful of your time. We have so many questions coming in. Michelle Singletary from the Washington Post wants to know, aren't there some situations where someone, for example, should pay down or pay off their student loan debt if their job is secure as possible?
Absolutely, girlfriend. But it's not so much if their job, and Michelle, hi, I think you're fabulous, by the way. It's not just if their job is secure, because there are many people out there who thought they had secure jobs. And guess what? They don't have an 8 to 12 month emergency fund. The key is, do you have a 12-month emergency fund? And if you have a 12-month emergency fund and your job is secure, you should absolutely take advantage of the fact that you should be paying down, given it's a federal loan, your student loan debt, to take advantage of the 0% interest rate that they're charging you right now, so you can decrease, obviously, your balance. Absolutely. But the sad part is that the majority of people aren't in that situation. They're just not. They need that forbearance. They needed that postponement till September 31st, because otherwise they wouldn't have had any idea how to pay that money down. If those of you are out there are in that situation, make sure that you contact your lender, because they automatically put you in forbearance, automatically. So to be able to send in money and pay it down, you have to let them know that's what you're going to be doing.
I'm just going to just step in and ask my own last question of you. You have spent so many, certainly today, but every day of your life, you're inspiring women. Who inspires you?
I'll tell you who inspires me. Everyday women. That women against all odds have made it. I'll never forget this one woman by the name of Debbie White years ago. She wrote me, and her husband got sick, ended up in the hospital, and she had to quit her job for $18,000 a year because the nearest hospital to them that could help him was a few-hour drive away. So she wanted to be with him. On the way, for her parents to visit, they would drive to visit them. And on the way to visit, her husband in the hospital, her parents were killed in a car crash, both of them. Her husband died. She got sick because she did a blood transfusion to him, got whatever it was that she had, and then her company let her go. Now think about that. Think about all that happened to her. And against all odds, and we would talk and we would see what she could do. And this was back in 1995, everybody. And little by little, she did it. She made it. And she is now doing so well, I can't tell you. The financially abused women out there, against all odds, that are abused in every single way. and leave with nothing on their backs other than their children, the clothes they're wearing, and that is it. And then they make it. And now they have a 12-month emergency fund. They own a home outright. They're doing everything and they're great. Those people inspire me because that's the story of hope, everybody. That's the story of America. Because America isn't going to make you, you're going to make America. And if you can just have faith in who you are, if you could just have faith that everything happens for the best, if you could just have faith that everything that comes your way, you are strong enough to handle, no matter what it is, one day you'll look back and go, isn't it amazing that I'm a multimillionaire? Seriously, those are the women that inspire me.
Um, uh, so, I just, they're asking if we can just go a little bit longer.
You can go as long as you want.
A few more minutes?
Absolutely.
Okay. So Patricia
We
is
can go a few more hours. Let's do
it. Patricia's asking, how are women helping other women to get jobs?
I'm not sure women can help other women get jobs, believe it or not. I'm not sure anybody can help anybody get a job. I've always found that when you help somebody, you go to somebody and you say to them, can you hire my friend? Will you at least interview them? Other people say, okay. And somehow the job never materializes. May, have you ever found that to be true? It's that you want to help a woman get a job, help a woman feel great about who she is, help a woman create a new vision about herself, help a woman keep good company so that everybody around her tells her she can do anything versus you can't do that. So it's not about getting something for somebody else because it never really seems to work. But that's why this whole organization that you're here today, where you help each other, and whether it's donating time or just donating ideas or gathering and making yourself strong. So the real thing about life is make sure that you're as strong as you can possibly be. Make sure that everything that you need to have in place, you have in place. Because women, we tend to make sure that everybody else is okay before us. We help our friends, our parents, our relatives, our dogs, our plants, our employees, our employers. And then all of a sudden we're 50 years old and we go, I don't know, I don't have anything. So we make sure everybody else is okay. I'm asking every single one of you to make sure that you're okay, to make sure that you become an inspiration for other women to see and go, oh, she can do that, I can do that. Inspire them by your actions and what you can do, and they'll follow suit.
I think that's so great, instilling that confidence as, some of the comments I'm hearing too is like sometimes women are shy when it comes to investing, and just seeing you, and hearing you talk like this and instilling that confidence is great. Is there a different measurement of like how aggressive people should be at different ages in their life in terms of investing?
I don't think so.
Yes.
And I'll tell you why. Is that this pandemic has wiped the slate clean. You might be 60 years old right now and have lost everything. And maybe you're 20 years old now and you've made more than you ever thought you could have. So it's not about how old you are as to what you do with your money. It's how you feel about who you are. It's how you feel about how money makes you feel. The goal of money, everybody, is to make you feel secure. And the biggest mistake you can make is to do something that makes you feel insecure. So if you have some money right now and you want to just try to invest, you don't have to be an all or nothing investor. You don't have to take all $20,000 that you have and invest it. See what it feels like to put $100 a month away, to dollar cost average into an index fund or slices of stock or whatever it may be. Now that commissions are at zero, and there really is no minimum that you need anymore to invest, you can put your little toe in the financial waters and see how it feels. And little by little, you'll learn. Do not forget, I was a waitress till I was 30. I didn't know anything about money. I didn't even know at 30, which is, I'm sure, older than some of you out there, right? That what a Merrill Lynch was. What's a Merrill Lynch? I didn't know what a money market account was. But you learn one word at a time, one vocabulary of, oh, that's what that means. But it's not just about money, because I can tell you, you can never solve a financial problem with money. The biggest thing I would love you to take away is that you and your money are one. If your money is a chaotic mess, it's because you are a chaotic mess, because money cannot do anything without you. You want to be powerful in life? You got to be powerful over your own money, how you think about it, feel about it, and how you invest it. You cannot go out and work for all this money and then give it to some financial advisor in the hopes that they're going to take care of your financial children. No, because you don't know, are they doing what they're supposed to do for you, or to make sure that they can pay their own bills? Today, most of you can do it on your own, with reading, with studying, with watching television programs, listening to my podcast, just little by little to see what it's like, not by going and doing things like GameStop and all of those things. Very dangerous. I'm telling you, that is very dangerous, everybody. There's a great way to invest, and just do it slowly. Do it slowly. And then when you become old like me, hey, you could have a really great life.
Yeah, I mean, to your point, there are so many tools out there now to help you educate yourself, right?
Yeah.
And it's growing by the day, and so I think you're right. We need to just empower ourselves. Do you see that, you've been inspiring us and counseling us for many years? Do you see that there are more women who are more confident now? Do you see that sea change?
I see that it's a ripple, believe it or not. The other day, and maybe it will be on tonight or tomorrow, but I was interviewed by Lily Singh, the comedian with the late night show. And she had no idea what a stock was. She had no idea what a stock market was. And we went through that. And it was like, how is that possible? How is that possible? I still get so many emails. I get thousands of emails every day that write into my Women in Money podcast. And still so many women are like, I've got divorced, Suze, and I don't have any money. So it's changing, but it's not like it should be. And everybody says, do women invest differently than men? No. Women need to understand they have more ability in their little fingers than most men have altogether. And this isn't a thing of putting men down by any means. This is a thing of rising women up so that you can be an equal partner with your male counterpart, number one, if you have one, and to understand that most men are also financial fakers. They absolutely are. They will tell you that they know what they're doing, and I'm here to tell you chances are they do not. So May, it's changing. It isn't changing as much as I wish it could. I just want to say that the official title, by the way, of my podcast is Women in Money and the Men Smart Enough to Listen. Because this isn't about segregating men and segregating women, and women, we have a secret. We have to bring everybody together as one and make the entire world powerful with investing and how personal finance really works.
Well, I think it just goes to show that we need to get you even more airtime everywhere so that we can learn from you, and men who are smart enough to learn can learn from you. Thank you, Suze, for your insights and inspiration. Please stay healthy and well. We really look forward to hearing more of your actionable advice on your podcast. I believe it's twice weekly. And for
Yes.
those of you who have not heard Suze on her podcast, you can find out more information at suzeorman.com/podcast. Nina, we'll turn it back to you, I believe, for any last thoughts. Thank you so much, Suze.
Thanks, May. Fabulous.
Thank you so much, May. That was wonderful, and thank you, Suze. That was amazing, and everyone should tune into the Women in Money podcast because there's so much more to learn, and we're with you, Suze. We're going to get there. So thank you. And I want to mention to those of you who don't know anyone personally to help, Visionary Women is a great place to put your dollars. We will use your dollars very wisely. We have a grants committee. We spend a lot of time and effort making sure that our dollars go to those organizations and initiatives that make a big impact. We don't want your money and our money collectively to go anywhere other than somewhere that's really deserving of it. And together we can make a big difference. So any donation or membership that you want to contribute, we'd be so grateful to have you along for this great journey that we're on. One more thing I'd like to plug before we get off, because we have so many of you. We are having an amazing virtual International Women's Day Summit. And it's going to be very exciting on March 8th. And we have incredible speakers just like Suze. And we have great moderators and we have great sponsors, and we would love to see you all there. You could learn a lot about it, see who the speakers are on our website, visionarywomen.com. And that's where you can contribute. That's where you can seek a grant. If you represent a nonprofit and are looking for dollars to help women and girls, please come and ask us about it, and we will see if we can give money to your organization. So I think without any further business to talk about, I just want to say thank you to our board. Thank you to so many who've tuned in. We're so grateful, Suze and May. With women like you, we get to have great programming, which brings great viewers and great membership dollars and donations so we can do more good in the world. So thank you, everyone. We are so grateful to have you here, and we can't wait to see you again.
Thank you, Nina.
Bye, y'all.